You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat, smiley face.
Hello and welcome to the China Shop. We're so glad you made it. We're so glad you're here. Come on in, come on in. I'm Shopkeeper Dan, and with me as always is Kyle, creator of financialineptitude.com. How are you doing today, Kyle?
Doing good. I don't know why they call it Good Friday, though. I don't know how you can have a Good Friday without the stock market. But other than that, I'm doing all right.
I know. I got an alert from my Webull trading app that was like, oh, by the way, it was on Tuesday. It was like, oh, by the way, there's no trading this Friday. And I went, what? Oh, you'd think because I'm so into this, I would be well aware of the market holidays in advance.
They always catch me by surprise, and I'm always annoyed.
Even at Christmas, I'm grumpy. I'm like, why aren't they trading on Christmas?
I know, right? Also, I got my second COVID shot, so I know what you were feeling last month.
Oh, yeah. Yeah, kicked your ass?
Yeah. I mean, I was out for a good 24 hours. I had to leave work early on Friday. I will say, though, that I would much rather feel like shit than lose 10% of my portfolio. I still stand by that comment.
Oh, yeah. Well, you got a low risk tolerance.
Right.
And a high pain tolerance. Come on into the shop with us today, folks. Sit back, relax, and hedge against the rage machine. We'd like to welcome any new listeners just joining us. We're here to smash our way into a complete set of fine china. Fine china not included. Sharing our ever-growing strategies for trying to maximize those gains and cut those losses. Definitely sharing those
losses.
Giant losses.
Terrible losses.
Terrible losses. And if you're new to the shop and stock trading in general, you can always check out the Knowledge Center on financialineptitude.com. And you can, while you're there, you can give our beginning trading episode a listen. We always have that link in the episode description. But the best place we like you to be is on our Discord. That's where we're at. Kyle and I are on there every day. It's really just an awesome place to be. Lots of great conversations about what's happening and speculation on why it's happening. That's my favorite thing in the world.
Which we're not that great at yet, but we're learning.
And when you do join the server, just send us a private message, email, or drop us a phone call with your mailing address. We'll send you a Smash It Yourself mug straight from the shop. We're just so glad you're here. We have a lot of fun, and it's always better with friends.
Don't forget, we also have an options episode, too. A beginner options trading episode.
Oh, that's right, we do. If you don't understand all the gobbledygook comes out of our mouths when we're talking options, great place to start is our basic options episode we just released with Chris Borman. That was great. That was a great time.
Yeah, it was. All right, show news?
Yeah, let's talk about some show news. What do we got, Kyle?
Coming up this Wednesday, we'll have our very first month-end review. We'll be covering kind of the things that we've learned since we started doing this show, and that's going to become a regular monthly fixture where we can just kind of talk about, recap over what worked, what didn't work, and give us a chance, too, to review some other strategies or terms or things that maybe it's been a while since we talked about and we want to reiterate some of those lessons. The week after that, we will have our good friend Richard Friesen back on. I think this time it's your turn, Dan, to be in the couch for that one.
Okay, all right. I'll get I'll get really drunk first, so I'm honest.
Let's see. The week after that, we'll have Jennifer Beck, CEO and founder of Cannabase, but she's since sold that and moved on. So it'll be fun to chat with her about the future of marijuana industries. And just kind of what goes into even starting one of those companies. I think that might be of some interest to listeners out there.
Do you think she would be offended if I had a bong and pulled bong rips the entire interview?
She was really excited to record on 420, so I don't think that'll be a problem.
Woo-woo! All right, really looking forward to this interview with Jennifer Beck, I'm telling you.
And then our last one for the month is not confirmed yet, but we're really excited for it. I don't want to drop names in case it doesn't happen, but this should be be a really good one.
I'm so fucking excited for that. You have no idea. Stay tuned.
Working on filling out May now, so We'll update those as they come, as their schedule becomes more known.
Oh, I'm so excited. It's so much fun here in the shop. Oh, and so many great people coming by and joining us and sharing their adventures and knowledge and insight.
And they're excited to talk to us. I don't get it. We're just two idiots with a podcast. Like, why do they want to talk to us?
I know. Shh. We've fooled them so far, Kyle. Don't let the secret out.
Richard's coming back.
He's doing it again.
I know.
Oh, yeah. This is awesome. Oh, yeah, we've just got a fantastic, amazing, sensational show for you today. It's jam-packed. We got lots of market-moving news, plenty of stocks on the radar, and more options than ways Chuck Norris could kill a guy.
Nice. I was hoping it'd be less dark this time.
Oh, I'll save it for later. I've got a couple that I want to. Oh,
you got to space those out.
On that note, gotta space those out. Folks, reach out to us. We just adore your messages and comments on Twitter and Facebook, TikTok, on Discord. We'll have a link to that Discord, as always, in the episode description. If you're old school, you can send us an email at twobullsfinancialineptitude.com or give us a phone call at 725-22-BULLS. Maybe you got a hot stock tip. Maybe you want to tell us about a great trade you just made. Maybe you just got the vaccine and you had even worse side effects than me and Kyle. Mm-hmm. It doesn't matter. Just give us a call. We love it when you reach out.
All right, Dan. Is it time to go do some bet results and Twitter polls? Twitter poll results?
Yes, Kyle. I do believe it is time to talk bet results. And the random, I think, goes first.
The random is terrible. Terrible. TD. Last week, the random selected TTD, the trade desk. It opened at 668.04, closed at 658.84, causing the random to lose another $5 or so, finishing at under 400, 395.26 to be exact, firmly in last place. We are better than random.
I didn't think that was going to work. I thought I was going to have to go first.
No.
But fantastic. It makes me feel a little bit better.
You beat random, Dan. You beat random.
I fucking beat the random. But I have a sneaky suspicion I did not beat you. I know I didn't beat you for the week. No. I picked Lowe's and not Home Depot. Let's get that out of the way right now. Home Depot hit new 52-week highs on Thursday. Lowe's did not. Lowe's opened the week at 192. They closed the week at 191.32 for a loss of 68 cents a share, or 0.35%. Brought me down from 491.31 to 489.56.
Was it 489.56?
Yeah, I'm down 2% for the month.
Oh boy, Dan. That makes me so happy to hear that.
Oh, shit.
Because as we know, this is the last of the month.
Oh, shit.
I went with Tesla because I was expecting those delivery numbers to come out at the end of the month.
Yeah.
And they did, but because there was no trading on Friday, I didn't get to see that benefit. But on the plus side, there was a lot of anticipation for it, and that drove that stock price from the opening at $615.54 on Monday to a closing price at $661.75. And it even peaked at $690 before it started falling off on Thursday, and it was a slow drop on Thursday. I was sweating it.
Yeah.
My bet total went from $462.11 last week to $496.80 this week, beating you by $6 or $7? Beating you by about $7.
Oh, fucking.
And if you could have
so close.
just not bet again, I think the side bet has come out to screw one of us every time we've made one. Is that about right?
It was those damn straddles and strangles. Yeah, we made that side bet. I lost that $15, and that made you the winner. And
so I've prepared a delicious list of consequences for you to choose from that we'll be revealing on the month-end review.
Oh, okay. So the bet consequence will be on the month-end review show. Okay, so you know that I'm the loser, but I don't even know what I'm going to have to do at this moment, at this point. I won't find out until we record that month-end review episode. Damn it.
I really like the idea, too, of making you pick which one you have to do.
Making me pick.
You call it a fun game of Would You Rather.
Would you rather? Oh, you son of a bitch.
All right, and then speaking of Tesla, real quick, let's hit those Twitter poll results. We asked everyone last week if Tesla would ever become bigger than Apple, and this was actually a 50-50 split between yes and no. Nobody liked your answer, Dan, of them merging, so that got 0. But
0. Oh, I didn't even pick it.
I know. It was 50-50, yes and no. So undecided.
Yeah, let's move on to some news.
Well, we all know why we're listening today. The shop is bursting with the week to replay. So sit back, we got some market affairs. Get some stories for the bulls and the bears. Clowns running companies, laws change overnight. Here we are. It's time for China Shop News. Yeah, now it's time for China Shop News.
Talk about that hedge fund that fell apart.
Let's talk about that hedge fund that fell apart.
All right, let's see. Bill Huang was the name of the guy who ran this thing. It was a family-owned hedge fund. Archegos Capital Management. Yeah, and we were looking at all that crazy action that was happening on Friday. It looks like a lot of it was because of this company, this hedge fund getting margin called, causing them to unwind about $20 billion in positions. We saw, what was it, Viacom and Discovery lose like 50% of their value as part of this.
Yep.
There's a lot of anticipation Monday to see if, that was the end or if there's still going to be more fallout from this. Thankfully, it looked like everything kind of stabilized after that. Kind of interesting that we never really saw any jump in Viacom. We didn't see it really spring back. But as far as anything else coming out of this, it looks like not a whole lot yet. And I say yet, because part of what happened last week that I think might have had something to do with this is the SLR rule expiring on March 31st. And I believe that stands for the supplemental leverage ratio. So it allows banks to leverage their money more so than they had in the past. This was put in place when COVID first happened to make sure that lending institutions didn't run out of liquidity. And the speculation is that the hedge funds and other financial institutions really abuse this. So now with that rule expiring on the 31st, there was a lot of anticipation too whether or not there'd be any more fallout from that. When those types of things expire, it's not usually like snap the fingers and now you have less leverage. There's usually a grace period in it. So there may be another week or two before those effects are fully seen. So that's something I'm kind of keeping an eye on. I was watching Trey's Trades kind of break it down, and he's of the opinion the next week or two we'll see blue chips like really take a hit, whereas these like heavily shorted stocks may start to climb as some of these over-leveraged companies start to unwind from those positions.
So Archegos was the big one in the headlines, but there's no doubt several others that are over margin.
Oh, you have to think.
Yeah.
It's not going to be just one random one out in the middle of Asia. Yeah.
Yeah. Oh, that's scary. Yeah. Watch your blue chips.
Watch your blue chips and be ready to buy because they might be on severe discount in the next couple weeks. All right, Dan, what do you got for us?
I guess I should talk about the jobs report.
Yes. That was a good one.
It's kind of a big, impactful story. The U.S. gained 916,000 new jobs in March. Unemployment has fallen to 6%. Its lowest level since the COVID recession hit.
That 916, too, was way higher than the expected, wasn't it? Wasn't they expected somewhere in like the 700,000 range?
675,000 expected.
Yeah, no, that's awesome news. That should be...
Yeah.
Oh, yeah. That should be real good for us bulls.
The stimulus has been doing apparently a good job.
Mm-hmm.
As we've seen before, if you just send people checks, they spend them. Surprise, surprise, it's good for the economy when everybody's spending money.
Have you spent yours yet?
Yeah, I put it right in my portfolio.
No, that's not really spending.
I spent it on selling puts and covered calls, sir.
I still haven't touched mine yet.
It looks like companies in leisure and hospitality hired the most people in March. And as a guy who works at a hotel, I can tell you hospitality is turned around a big, big, big corner.
Really?
At least in my neck of the woods. In terms of sales, I mean, my hotel's been selling out on like Wednesday nights, and that's not normal for late March, beginning April.
Oh, we need to look and see when like Marriott and Hilton and all those hotel chains, when do they release their earnings?
Yeah. Well, at least where I am in the Southwest, it looks like travel has picked up to where it's and it's not just travel and hotel sales. A lot of it is business related. As business picks up.
Yeah.
We cater to a lot of contractors that come in town to do work for the week and then leave on the weekends. So we're mostly filled with business guests, customers. So and then all the retail casual guests come in and fill us up to capacity, and to the point where maybe 4 weeks running, people are asking me like, "What's happening around here?" I'm like, "Nothing's happening. It's just everything's it's moving again." They act like there's a Comic-Con going on.
Oh, right. Yeah, it's just been so long since anything's... That's interesting, too. And that should only get even better, too, because the infrastructure plan that was just unveiled, I mean, that's still got a big hurdle to pass to get through Congress, but that should be a driver of a lot of that.
That segues into my next story, if
I know.
If you don't mind.
I do my research.
Just tee that up for me. Part of that infrastructure plan is a $174 billion investment in electric vehicles. That's going to be huge.
Yeah.
That's going to be huge. They want to do two big things. They want to redo the tax credit for buying an electric car.
Yep.
Because right now the existing tax credit rules are only for the first 200,000 cars sold.
Oh,
so
okay.
like General Motors and Tesla, you can't get a tax credit if you buy a General Motors or Tesla right now. But if Hyundai Kia hasn't sold 200,000 all-electric vehicles in the country yet, you'd still qualify, which is just weird to me. So they're gonna try and switch that over to just a solid tax credit.
I was gonna say, wasn't part of that too, like the charging stations they're trying to start implementing?
Yeah, that is the second part of it. They call it charging anxiety. People think I can't get an electric vehicle because where will I charge it if I'm out on the road?
Right.
So they're going to try and build 500,000 charging stations all over the country. That works out to about 10,000 per state if they evenly divided it, but it won't be because they're not going to put 10,000 in Alaska. That's crazy. 10,000 in Hawaii. Currently there are only 41,400 dedicated electric vehicle charging stations in the U.S. compared to 136,400 gas stations.
Right.
So we're only got 25% of where we are with gas stations on charging stations. They want 500,000 stations. They are literally saying we're going to have 3.5 times the amount of gas stations. That's how many electric charging stations we're going to have.
You got to think that it takes a lot longer to charge your vehicle than it does to fill up a tank of gas. It's a good plan, but there's a lot of hurdles to that because the charging stations are very expensive to put in place, especially if you're doing like the quick charge ones where like you can charge up a vehicle in like 10 minutes. I mean, it costs something. I mean, it's very capital intensive to put those in.
Right. It needs its own power stuff because our stuff is all AC and it's a DC fast charger. Just over 10% of today's charging stations are DC fast chargers. The rest, though, you do have to wait hours. But I think the big thing for me is remember Neo Day. If they can deliver on their promise and we start getting batteries that give you a 500-mile range, you're not going to need that 20-minute fast charge.
I kind of like the way Neo does their battery swap stations, where the subscription plan, where you just drive in, have them drop out your battery chassis, and slap a new one in there, and you drive right off. Like, to me, that's the way to go.
I agree. From what I understand, in Tesla's earlier days, they were looking at that, and they opted not to do it. I think because of engineering reasons.
Right.
But it makes me sad because if that was the standard here, you would never have any charging anxiety.
Right. Well, you also get a lot more freedoms and things that you can accomplish when you have a communist government.
Yeah, there's some pluses and some minuses. What else we got from you in news, Kyle?
Okay. The last one that I want to talk about, and this one really, God, what's that term that Family Guy uses? Grinds my goat or grinds my gears.
This really grinds my gears.
Yeah, AT&T came out as lobbying against fiber. They come out and said 10 megabytes per second uploads are good enough. Well, fuck you, AT&T. And I'll tell you why this pisses me off so much. I remember reading an article talking about how we should have been on fiber. Like, there was all kinds of government grants going out to all these telecommunications companies like 10 or 15 years ago to put in fiber networks. And instead of putting in fiber networks, they developed DSL, which was like a shittier version of coax. Yeah, so they came up with DSL and they put that in instead and pocketed all the extra money they got that should have gone towards putting in a fiber infrastructure. We should be at the same spot fucking Europe's at right now. We should already have fiber. But because greedy corporations decided that, I mean, what do you expect?
Let's take this short-term gain over the long-term gain.
Yeah. So now they're coming out and saying, no, we don't need fiber. Well, fuck you. And of course we don't need it, but I want it. And Google's going around putting fiber in, so obviously there's people that want it too. That's how capitalism works.
Well, and just because we don't need it today doesn't mean we won't need it 2, 3, 4, 5 years.
Yeah, it would have been really nice to have all that shit in place 10 years ago when it was supposed to go in.
Yeah.
I might be selling my fucking AT&T shares just because fuck them.
Out of pure revenge trade?
Spite, yeah. I'll have to ask Richard when we talk to him where that falls on trading strategies.
I'm pretty sure that's a revenge trade he advises against, but we'll find out.
Oh, fuck you, AT&T. Fuck you.
Yeah, they're not gonna sponsor our show anymore.
No. All right, Dan. Is it time to get through some paid content, or what do we call that?
Oh, is it time for school?
Is it time?
Yeah.
Is that a bell I hear?
Well, they paid a lot of money for the show to talk about this, and we don't think that we'll drop it on time. By the time we cash the checks and the contents in the press, we're on the Discord just in time to see our pride fly by. It's alright, cause it pays for the show.
We got paid $110 by a third party via PayPal to talk about Enthusiast Gaming Holdings Incorporated.
Dan, I'm excited about this one, and let me tell you why.
Yeah, tell me all about it.
Because it's not marijuana.
Yeah, it makes me sad. No, tell me why is this so exciting?
Okay, so this company, stock ticker ENGMF, that is the over-the-counter ticker for the U.S. markets, and EGLX is the Canadian markets. Mm-hmm. These guys have built a one-of-a-kind gaming ecosystem where millions of gamers are connected and engaging every month. So, like, their plan is to be there when the people put down the controllers. So they're talking about 48% of the enthusiast gamers don't even use Facebook. They apparently would rather be on the Enthusiast site conversing with friends or the other millions of gamers. That's interesting.
Yeah.
Approximately 65% of them spent 15 plus hours a week playing. 67% of enthusiast gamers buy more than 7 video games a year, and 63% enthusiast gamers are influenced by online ads to make online purchases. These figures could potentially drive even more growth going forward.
So this company, they got access to 300 million gamers worldwide. They got a strong business model, impressive financials. They are growing. They're an impressive company on the market right now. As the gaming world grows, these guys could potentially expand even further with millions upon millions of gamers that they could snatch up.
One of the other things I thought was kind of interesting, we were looking at the charts that they, on the, what do you call this, a promotion sheet they gave us. It looks like it's out of date because they were talking about the stock being oversold at, what was it, like $1.27 or $1.47, pointing out that it was probably a great buy at that point. And with it trading at over $7, I'd say they were right.
Yes, they were. If you look at the 6-month stock chart, it's quite impressive. Quite impressive.
Looks like it might be pulling back a little bit right now, but I would watch it, look for some support. I might be tempted to buy into this one.
Yeah, you draw that trend line, it doesn't look like it should get below 6.
Oh, that is a nice trend line. Let's see. In 2020, their revenue was announced at 127.6 million. It's an increase, Q4 increase of 34%. Q4 direct sales grew 230% to 3.3 million versus quarter three. Q4 revenue per viewer grew 100%.
Wow.
So yeah, they made waves with their acquisition of Omnia Media for 44 million. That merged platform now attracts an additional 4.2 billion monthly views. So it's a company that's it looks like it's already got a footprint in this great market and already showing, some fruits of that labor coming in is with growing revenue. It's not quite profitable yet, but once this thing does become profitable, I think it's going to probably be it's going to look a lot more attractive at its price right now.
Oh, yeah.
I'm going to close with this. The more I keep looking, the more I'm actually liking this company. So I think that right there kind of speaks for itself.
Yes. There you go, folks. Enthusiast Gaming Holdings Incorporated. We got paid to talk about them, but we sure don't mind talking about something this exciting.
It's alright, cause it pays for the show.
Let's get on to some stocks then.
Here we come, trading on the street. Get the craziest gains from when we're in too deep. Here we're just two bulls smashing through a china shop. We're so glad you joined us, and now it's time to talk about stocks. Stocks.
Oh, well, okay, Kyle, we just talked about Enthusiast Gaming's holdings. Did you end up buying any shares?
I actually did. I was trying to get them at 7, and then they ended up spiking up from there. I was able to buy a lot of shares at $7.40. After looking at the way that chart was stair-stepping, I actually was really liking the momentum it was carrying and just the industry in general. Like this one a lot better than some of the other ones we looked at.
Oh, yeah, obviously. Well, and that's one of the beauties of working with LifeWater is they let us pick. They don't say you have to talk about this company.
Right,
they say here's the companies that need to be talked about. And that makes it way easier for me because talk about something I don't believe in,
Right.
It can be like, oh yeah, no, look at this one. I love me some CBD.
I'm gonna sell puts on or buy puts on this.
Right?
No, I just got to make sure I set that stop loss so that way I don't lose more than $110.
Oh, brilliant.
All right. Well, the only other move I made in stocks that I need to mention here is I sold a couple more $15 puts on FCell expiring 4/16. Again, like we said last week, I'm talking about this even though it was an options trade in the stocks portion because this is a trade I'm using to try to acquire shares. So by selling $15 puts that expire on April 16, I'm actually hoping that I can buy them when those actually expire. If those expire in the money or below $15 a share, then I'll be purchasing them at 15. But I get to keep the premium, which in this case was $1.25 a share. So if I have to purchase them, it'll be at $13.75. And with Biden's infrastructure plan coming out, I know there's going to be a push for more green energy. So companies like FCell, Plug Power, all the EV companies like Tesla and NIO and I don't know, pick your favorite. What was that one that I had as a bet pick that did so well? BE, Bloom Energy, is that? So yeah, any one of those I think are going to be doing well in the next few months here. Last thing I wanted to talk about in stocks, this isn't a move I made yet, but I've talked about Cresco Labs a lot, my favorite MJ company. And I was doing a little bit more research on this because we keep seeing that more and more of these states are legalizing adult use. I think you posted that New Mexico just came out. We talked about New York proposing the legislation. Still hasn't been signed into law yet, but they're on the path to legalizing in New York also. And then seeing Cresco Labs with all that extra cash that they just raised, they're already purchasing a company to get a footprint in Massachusetts. Revenue has just been going through the roof. If Congress does go through and decriminalize MJ, then one of the things I don't think we really ever talked about is that all these marijuana stocks suddenly become eligible to become listed on major exchanges. They're no longer over the counters.
That's right. When
that happens, then you start having index funds purchasing more. It just becomes more mainstream. More people have access to it. They don't have to pay fees to trade it. It'd be huge for these stocks. So I'm giving some serious thought into really increasing the holdings that I have on it in the hopes that this happens in the next 18 months while the Democrats have control of the House and the Senate. Because that's the time that it's going to happen.
Yeah.
If it's going to happen, it's going to happen in the next 18 months before the next midterm elections.
Yes. I totally agree. It's one of the reasons why I trade in marijuana stocks. You may have noticed.
I do. Anyway, that probably make a good Twitter poll, though. I don't know. What do you think? Will Congress decriminalize marijuana in the next 18 months? Is Kyle crazy?
Oh, yeah. I love it. I love it.
All right. Yeah, let's make that. That'll be our Twitter poll. Look for that.
There we go.
I don't know when this episode drops.
Yeah, we'll toss that out there. That'll be good.
All right, Dan. What do you got for stocks?
Well, following your precedent of putting my put sales in stocks, because that is what I'm doing to get the shares. I want these sweet shares, so I want to get them, and I want to get paid to buy the shares. Mm-hmm. So I sold some puts. I sold a put on wastewater resources. Now, I already have 100 shares of those because I sold a covered call. Mm-hmm. When I did the math and where the price was at, it was like, oh, well, I'll actually be moving in cheaper if I sell this covered call, buy 100 shares and sell the call. On Monday,
okay,
the price of Westwater had been falling, and they hit a low. I don't have the exact chart in front of me. It was 4 something.
Yeah, I think if you can buy that any point under 5, that's a great buy point for them.
Right. So, well, I didn't buy the shares then.
Mm-hmm.
I actually bought them when they were at 6, and the calls were worth more. But when the price per shares sank down, I sold another $5 put because the premiums shot up because everybody was scared. Right. I sold a $5 put at 50 cents. So it's like buying the shares. If it gets triggered, I'll be buying the shares at $4.50, which to me is a great
awesome
price.
Yep.
For 100 for Westwater Resources. We've been watching this stock forever now.
Yeah.
And I did something that I thought was really, really solid because we've been watching this stock and it hit down as a low $5 level. I said, okay, this is its resistance point. It doesn't like to drop below. Maybe into the high 4s sometimes, but it doesn't like to drop much lower than this. I bought back the call I sold.
Nice.
And locked in the profit. So the shares, even though I bought them at $6 even, I really paid $5.35, I think, somewhere in there. Mm-hmm. And then I sold that put, right? And now I'm sitting as it's starting to go back up. And the plan being, when does the insurance premium on a call get biggest? When the stock's going up. So I'm waiting for that stock to go back up to around 6 to sell another covered call. But that's option.
Yeah.
Damn it.
Yeah.
I just got rolled. Anyway.
You're on a roll. I was going to let you go with it.
So I'm trying to get more shares of Westwater Resources. $4.50 is a great price. I did sell another I did sell another put later in the week. And that was on... Oh, yeah. And I sold another put on CVM.
Okay.
That's
the one I almost lost my ass on. Other than a last-second spike.
Yeah. Sell-side Corporation.
Yeah, I'm not trading in them
Healthcare.
anymore. You can have that one.
I can have that one.
Yeah.
Well, I just don't think... I think that their shares are $5. If I can get them for $5, that's just fine. I mean, the past year, they haven't gone under $10 in the past year.
Right.
Okay, so I'm collecting on just telling somebody I'm willing to buy their shares. That's all I'm doing. Like, hey, I'm willing to buy your shares, and I'm collecting money on that. I sold that put, $5 put. I sold it at 56 cents.
Oh wow, that's pretty good. What's the stock trading at?
$16.
Okay. Wow.
$16.47, and a stock hasn't gone under $10 in the past 1 year. I'm looking at their 1 year chart. It's not under 10. I go to I have to go to their 3 year chart to find a spot where at the end of 2019.
God, that feels like almost free money.
Right? Sorry, the last time they were $5 was the summer of 2019.
Okay.
That's the last time this company was at $5.
Yeah.
So, yes, I will buy 100 shares at $5, and you can pay me $56 for the right to do so.
And I'll do that every month until it actually happens.
Yeah, right. That's what I feel like. I'm just collecting checks. Like, yeah, I'll buy this stock that I think is worth much more than $5 a share. I'll buy it at $5. I'll buy it at $5, guys. And like they keep saying, okay, yeah, that's fine. That's fine. I definitely want to make that deal with you. I'm like, okay. Yeah, and that's so now I have, and that expires May 21st. So
Okay.
I we'll see if I get those shares.
Probably not.
I still have my shares in Sundial and OGI, my pot companies. I'm trying to sell my Sundial shares, but I have to wait. This is so funny. This is why I love options for stock trading, or should I say, this is why I like doing my stock trading through options, because I want, because of my price point where I bought them. I paid just about where they're at right now.
Right.
I'm waiting for the stock price to go up to inflate the value of those calls. Like, I want to sell a $1.50 call, but I want to do it when a $1.50 is worth something. Mm-hmm. Right?
Yeah.
So I'm forced to just sit and wait. I'm not selling any more puts because I don't need new shares. I'm ready to exit. So now I'm just eyeing. I think I put in the order and I have it just sitting there,
right,
waiting for, kind of like I don't have to think about it anymore. If
you get your price,
I'm trying to get paid 25 cents for the $1.50 coupon. So yeah, I'm trying to get paid $100 to sell 400 shares at a price that's 40 cents higher than it is today.
Right.
We'll see how that works.
No.
Anyway, so that'll wrap up the things I had to talk about in stocks.
All right. I got a few earnings that we can touch on real quick, and we can move on.
Yep.
My motto's always been, when I'm right, it's right. So I'll wait and watch the charts and the change in price. When the movement's mostly finished at the end of the day, and we know the coming earnings gonna move it my way. Skyrockets in sight, earnings call delight. Earnings call delight.
Like I said, the pickings were really slim, but I actually saw some in there that caught my eye. All right, so on the 6th, we have paychecks, which I just kind of threw in there because we talked about them before. If companies are increasing the numbers of people they have working for them, then the company that cuts the checks for them all should probably do well. I think there are payroll solutions. I should probably double check that. Plus, IT's been kind of on a that payroll, HR, retirement, insurance services. Mm-hmm. They're also an IT company. They're classified as that, and that IT sector has been really hot this last week. I think it was the top performing sector. On the 7th, Wednesday, we've got Carnival again, MSM, which is MSC, Industrial Direct. It's remember Fastenal? Like one of those just suppliers for basically industries. When I worked for the different steel mills, we used MSC as just an ordering thing. You place an order for some nuts or bolts or hand tools, and you get them the next day. With industries starting to become a lot more booked, like I know at least in the steel industry, things are looking really good. Hoping to see that they're going to be turning a nice profit as a result of everything, kind of starting to fill back out again. The next one that's on the 7th is a steel company, SCHN, which is Schnitzer Steel. I've never heard of this company.
Schnitzer Steel.
It's a small cap, but I'm hoping that maybe this one hasn't really gotten a whole lot of attention because it's kind of more under the radar. And because the pickings are so slim anyway, I figure maybe, might be a good time to look at a random steel company and see if it kind of carries on that same momentum like Nucor and CMC and some of these other ones have. I mean, I know with the company I work for, our orders are booked all the way through July. So this is a good time to be trying to ride that one, infrastructure news, because the steel industry is going to benefit from that, and then 2, just orders and everything returning. They seem to be carrying a lot of momentum right now. Last one that caught my eye was on the 8th, and that's Levi Strauss. Seems like these random apparel companies have been doing quite well. I think people are finally starting to just get new clothes or something, or maybe they finally made their transitions to online and are starting to reap some of those benefits. Like I think we were talking in the Discord with one of our listeners, and he was mentioning Five Below being like severely overrated, and it's still got great ratings. Like the smart score on that was still an 8, price target of 215.
Overvalued?
Yeah, I think he was saying it was trading at like 40 times earnings. Like, Jesus.
Oh my gosh.
Yeah, so a lot of these clothing and apparel companies seem to be doing really well right now. So keep an eye on that one. See if that's one of those ones that maybe the expectations are higher than people think. Might be primed for a bit of a dip. It's only a couple dollars off of its high, so yeah, I might keep an eye on that.
All right, we ready to move on?
I think so.
All right. Well, before we do, folks, I'd like to take a moment to tell you about how Two Bulls in a China Shop is brought to you by Sue Pullen at Fairway Independent Mortgage, an equal housing lender. Sue Pullen is a certified mortgage advisor who focuses on finding the right product for you and your needs. She's got over 20 years of experience, helped thousands of homeowners, and whether it's purchasing, refinancing, or even a reverse mortgage, Sue will help. She's licensed in 25 states and growing, so reach out and see what Sue can do for you. Best way to reach her is just give her a call at 520-977-7904, or you can drop her an email at spullen@fairwaymc.com. That's SPULLEN at fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Pullen has an MLS number of 206048. That email again is spullen@fairwaymc.com, and that phone number is 520-977-7904. Reach out to Sue Pullen for all your mortgage needs.
I feel like we should reach out to Sue and ask her if she's licensed in more than 25 states now, since we keep saying it's growing.
Yeah, well, that's what she told me.
Yeah, but when was the last time we checked?
Yeah. Step up, Sue. Are you at 26 yet? We're waiting.
Yeah.
Everybody's waiting.
You got to tell us so we can update our script. Don't make us liars. All right, options?
A little less conversation, a little more options, please. All this volatility just ain't bothering me. A little more puts, a little less small, a little less hooks, a little more calls. Concentration, open up your ears, baby. It's time for options. It's time for options, baby.
Shall I start us off on the options train?
All right. Yeah, why not?
So I mentioned a little bit about Westwater Resources. I'm trying to get more shares. I also have those shares. Really, really, really proud of myself for knowing the stock and understanding where its price was, and buying back the call I sold. Mm-hmm. And literally within the next 2 days, the stock turned around and started going back up. So I couldn't have timed it better, and it wasn't luck.
I did the same thing with Jumia. Jumia started rising as soon as I closed out that call side of my straddle that I sold. Something to be said for closing out worthless contracts that are still on your books.
Right. Well, this one wasn't worthless. This one...
Or close to. What did you buy the call for, or what did you sell the call for? What did you buy it for?
I sold the call for $1.25. I bought it back for $58.
Okay, so you get double your money, though. More than double. I'd say you did all right.
I did all right. Yeah, I made $66.34.
Mm-hmm.
And so it basically brought the cost of my shares down to $5.30. So right where is that? Right where it's at. I did have to. I did lose money on one of my spokes of the wheel. I had invested in. I should say I had sold a put in eBang Industries. I'd sold a $7.50 strike price April 16th put, and that was one of the companies I found that the Thinkorswim analysis was like, yeah, the trade probability of it getting below $7.50 is it's only 23% likely. Mm-hmm. I was like, oh well, yeah, I'll take those fucking odds. Well, the company announced a big share offering at $6.10 a share.
I think you have to be watching for that anytime a share price is overvalued, especially on any company that doesn't have a solid revenue stream already. Growth stocks in particular.
I didn't do a lot of research into that first round of selling puts that I did.
Yeah, that happens a lot.
But you know what? I'll say this: of the 14 trades that I've made trying to play the wheel, only 2 of them have actually lost me money.
Mm-hmm. So far,
this was one of them. So far.
How are the rest of them looking?
Well, I should say. Let me count up I should say of the ones that have closed. 1, 2, 3. Oh my God, I was wrong. No, okay. So I have closed 19 trades selling options for the wheel.
Uh-huh.
Of those 19, only 2 lost me money.
For the wheel?
Yeah.
Okay.
Since we started
Yes.
doing the wheels.
Yep.
Since I started selling options.
The wheel is fucking awesome.
I lost money on IDRA because they came out and announced their drug didn't work.
Yep.
And I ended up only losing 9% of the money that I risked on selling those puts.
Mm-hmm.
And then I just lost on EBON. I had to buy back my put that I sold, and I ended up losing 7.46% of the money I risked.
You might lose a little bit on the put side of it when you first enter the trade, but when you finish it off by selling the covered calls on it, that's when you get it back if you lost anything on that end of it. It seems like it's really hard to lose money doing this. You may not make a whole lot, but it's really hard to lose a lot.
It's steady. It's low. It feels low risk. Like I said, 2 out of 19.
Of everything we've fucked around with, this is a lot less riskier than anything else I think we've done.
Yeah. So I lost money on that one, but I don't think I could have predicted, even if I'd done a bunch of research, that the company would come out and say, hey, we want to sell 10 million shares at $6.10 a share. It's like, oh, shit. So, like, literally, as soon as I read that article, I bought my put back.
Just closed it out and moved on.
Right? I'd take a loss of $56 versus if I hold on and it gets exercised and those shares are now at $6.10. I didn't enter this trade to actually get the shares. I wasn't actually looking to buy 100 shares. I was just looking like CVM, where like I'm gonna sell these puts and watch them expire worthless.
I think that might be a flaw in your strategy. I think that if you're playing the wheel, if you're selling puts on companies, then I think you have to be prepared to buy the shares. They need to be stocks that you do want to own.
I agree. And if you look at the thing I posted, I have my not yet sold, the ones that I'm trying to sell. They are all companies, IDEX and OGI and Westwater Resources, WWR, companies that I do want shares to sell the calls on.
Okay.
I do agree. And watching it play out like this, like we have, that's where it got me to.
I think the thing that changed, though, is if your fundamental analysis or the reason that you wanted to own them has changed, which in this case, a dilution of the share pool could have completely changed your reasoning for wanting the stock, then that's okay. But your initial statement was saying that you never really wanted to own them to begin with. Yes,
I wanted to play the trade probability analysis game and see where it got me.
Yeah.
But that's when I came face with the decisions of, do I really want 100 shares? And the answer was no. Was like I came to that very same conclusion. Was like, well, then you got to stop selling it.
Yep.
Stop selling these puts on companies that that's just gambling.
Yeah.
Anyway.
Yeah.
And then I lost a bunch of money on all my straddles and strangles.
I was going to ask you about that. Are you finally willing to say that straddles are not a profitable enterprise?
Well, yes, very much so. My first round, I sold 5 different straddles and strangles. Only 2 of them made me money, and I lost about 17% overall.
Yeah.
The second round of the 5, only 1 made me money, and I lost 44% overall. So I'm going to say I've tried it 10 times in the past month, and only 3 of them have actually made money.
But not enough to overcome the total losses, or even close to.
Oh, no, not even close.
Yeah.
Like the average gain is like 30%, and the average loss is like 60 something.
So this is where I think
probably bigger than that.
I think the better strategy with straddles and strangles is to be selling them as part of a covered call on a stock that you like. Like with Westwater would be a perfect example. You have shares already, so the call end of it is covered, and then you're selling both of them. So now if you end up having to buy some more shares, then you're getting double the premium basically.
I totally agree, and that's exactly what I'm doing. I sold that put because I'll take another 100 shares of Westwater, please. Another consonant, please. Another sweet vowel.
Just a regular vowel,
sweet
please.
consonant.
You got anything else to cover?
Nope.
All right. I had, 3 moves that I got to talk about. April 16th, $14 calls on FSEL. I sold against shares that I currently held. I left a third of those shares available because it looked like the stock was starting to see some positive price action. So I wanted to be free to sell a higher strike price just to try to get a little bit more profit out of that. But at the time, when I went and looked and figured out what my actual cost per share was, it made sense to sell those and just get, not world-beating gains, but gains and make it profitable. Because those 14 calls looked like they were going to exercise, that's why I sold a couple more puts on, I think it was a $15 put, to try to replace those shares. I want to keep playing with the F-sell, just keep doing this cycle of getting put shares and then selling calls to try to get them called away. One of the other ones I did was a May 21st Bed Bath & Beyond. I sold $30 calls at $3 on 50% of the shares that I had. Considering that I got these shares somewhere around I think it was somewhere below $20 a share when I first was fooling around with options when we first started this. That's fucking outstanding returns. I figured I was stupid to not try to take something out of this. The last trade I made was buying KTOS for $30 calls. Shit. And I think you did the same thing. I think you did it right after I did.
Oh, yeah.
I saw some alerts coming through and I finally learned what a call sweep was, because I noticed that sometimes when we're looking through the alerts, they talk about being call sweeps or just call purchases, or they either call it just a call or they call it a call sweep. So what a sweep is when somebody says, I want these right now, I don't care what the price is. It's a market order for options. And when someone puts a large order in for a call sweep, that means that they're trying to get that price now because something's going to happen. So that's what was going through my head when I saw that come out. I knew it was part of the Archegos fund with that coming online. So I thought it was worth the gamble. I didn't put a whole lot on it, which was smart on my end because I knew it was a gamble, but I knew as I was putting it in that it was probably not an impulsive trade, probably not the best way to be doing this.
So I saw you make that trade, and I followed suit because I read, KTOS is part of Archegos.
Mm-hmm.
That's good enough for me.
Anyway, so those, I'll probably be looking at getting rid of them next week. I know they have 2 weeks on them, but I don't think it was a smart move. Even as I was doing it, I didn't think it was that smart of a move, but still didn't stop me from doing it. There's 2 other things I wanted to really quickly talk about. My Jumia, I still have a put. I closed out the call end of that straddle I sold because Jumia looks like it's starting to run up. I'm probably going to get put shares unless it closes above 45 on April 16th. So depending on how that looks, I may look to try to sell another covered call on that in anticipation of getting those shares. Just have to watch it and see how it runs for the rest of this week and next week. Last thing I tried to do was to back up my bet. I was looking at Tesla when it was dropping below 500, and I put the order in. I never actually got it. I tried to buy $600 calls and sell $620 calls to try to execute a bull call spread where you sell the further out the money to get a cheaper premium, because the premium on those $600 calls was like over $20. The total cost of the thing would have been somewhere around like $9.60 each of those 2 contracts. The 600 calls bought and then 620 sold. I really tried to get that because I thought with those numbers coming out that would have been a solid move, and it turns out it really would have been. Evidence from the bet. Yeah. I almost went and tried to do it at a higher number, and I backed off as, I don't know. I feel like I saw it. I had my opportunity. Didn't get it. That's okay. I'll move on, find another better opportunity. I don't want to chase it because I missed out. And that pretty much wraps up my entire week. You want some options alerts?
Yeah. Let's hear the latest round of options alerts.
All right. Viacom, as we mentioned earlier, lots of traders looking for a bounce. There was, I think, 2 or 3 sweeps that I saw for April 16th, around $40 strike price. They were trading around $6. I didn't write down the full trades. I just wrote down that there's multiples of these. There's also a June 18th, $47 strike price that had a couple $100,000 on it. Might look at this one myself. I don't know. I would have liked to have seen it drop a little further before I tried to play a bounce on it. I think if this one does go back up, it's probably going to be a slow steady, not something that you necessarily is conducive to an options trade. Alibaba on 9/17 expiration, a $210 put at $14.35. There's $2.5 million on that. That was a bullish trade. So yeah, somebody wrote a lot of contracts and got a lot of money. And that got me thinking, because there's a bunch of them from last week that we talked about on Alibaba too, but those were for like a couple years down the road. There's a lot of fear about these Chinese companies being delisted. We talked about that back when that legislation changed, where they had to open up their books to our auditing standards. This is making me wonder what happens if those contracts get delisted.
Ooh, like if you sold all those puts and it gets delisted and you're just not on the hook anymore?
I don't know. I don't think so, because that doesn't make sense, but I'm not sure how the mechanics of that works. So I'll have to do a little bit of research on that. 'Cause maybe there is an opportunity there.
Yeah.
Start selling some really far. Yeah. Yeah, there may be a loophole there. I'm guessing somebody else has thought of that. But maybe that's why people...
I'll go ahead and sell 1,000 of those, please.
Let's see. CCL, Carnival, 416, $30 call sweep, meaning somebody wanted them now. 44 cents a contract, $70,000, bullish again. Square, I think it is, SQ. April 9th, it expires next week, $232.50 strike price. Another call sweep at $6.45 a contract. This one was just under $500,000. Let's see, then we had two really big ones. One was JD, September 17th, $80 calls. These were $11.50 a contract, $5.7 million. This was very bullish, meaning that it executed closer to the ask price as opposed to the bid price. And then SC was the last one that caught my eye. That was May 21st, $250 put at $35 a contract, $3.5 million. That one was bearish.
A lot of options alerts.
Yeah, there's a lot of big money ones coming up. I threw in a couple that were expiring sooner, so that way we can kind of continue our evaluation, see if what we saw from all the previous ones we looked at is continuing to be the trend. Whereas you want to be on the writing side of these rather than the buying.
That's a very common theme, I found.
Yeah, it seems to be. All right. Okay. Man, for a short week, it feels like a lot of shit happened.
Yeah, right? 4 days, and it's still just as much to talk about.
It feels like more. God damn. What was your good?
Oh, my good has got to be timing the repurchase of the covered call I sold on WWR.
Mm-hmm.
Watching that stock bottom out, saying this is the bottom, buying back that call, and then watching the stock turn around. That just felt so good. Warmed my heart right up. And then, so now I just sit back and wait for it to get up back around 6 and sell another covered call.
Yep. Oh, man. Nice.
Yeah, felt really good. What was your good?
I got 3 to choose from. The first one being my Tesla attempt. I tried to make that Tesla trade. I feel like my research or my intuition was spot on with that. It didn't execute, but I was on the right path. Also, holding off from trying to chase gains was good on that, too. The other one was FSell. Yes. Selling those cover calls, even though I probably left some on the table by not waiting another day. At the time, money in the hand is better than, nothing. Taking small profits for less risk. That's something I probably need to do more of. But, those 2 were really good. But you know what was the best for me for this week? Every single order that I put in on my phone, before I just instinctively hit the confirm trade button like I normally do, I stopped. As my thumb was going to mash that button, I stopped and went back and looked and verified every single trade had the right transaction type listed.
Well done, sir.
Looks like I finally learned something.
Oh, I'm so proud.
What was your bad for this week?
Oh, definitely the EBANG, the EBON, EBON, the puts I sold that I didn't actually want to have exercised, and seeing that news pop up and doing that quick math of, wow, if these get exercised, I've already lost $140. Then take away the thing. Yeah, I'm already in the hole no matter how much I got paid for that coupon.
Right.
So I got out of it, and then realized that I never should have been in the trade to begin with. So that was bad.
Yeah. That's kind of similar to mine. My bad was my KTOS play. That was impulsive. I knew as I was making it. If I wanted to make that trade, I think what I should have done was either done something to mitigate the total cost of it, like buying a spread, or really more preferable to that would have been trying to cover call on that. Just get some shares and then use that premium to reduce the cost basis. It was good that I only put down a little bit amount of cash on that. I didn't bet a whole lot. I mean, it was a really small amount. It was kind of a what the hell.
Yeah.
Because I do feel like one of the benefits of selling all these contracts that we're doing is that we're taking the little bits of money in order to fund the lottery tickets.
Oh, so what was your ugly?
I think it's got to be that I've been slipping on my trade logs. I haven't been keeping them up as well as I should have. I haven't gone through and calculated out my total gains for the last 2 weeks. That's really bad.
Wow.
Yeah. I mean, I've been keeping track of all my trades. I just don't know, how have I done? Am I still up? Am I still down? Have these things been working or not? God damn, that's really bad. How could I possibly know if I'm doing good or bad if I don't know what I've done? I've got to fix that. Otherwise,
Yes.
I will fail at this. So that is definitely an ugly.
Yep.
What was yours?
Yeah, mine was trying to drink from the straddle well again.
You learned, right?
I learned. Yeah.
Think of it as you paid some tuition, you passed the class.
And you know what? Doing the work for the class and having the log to look at on my spreadsheet and see them all staring in front of me.
Mm-hmm.
And I color code it. So the reds are losses and the greens are gains. And when it's like, oh, I'm looking at my last 10 strangle straddle trades. Oh, wow, there's only 3 green and 7 red. Yeah, it's like, oh.
All right, Dan.
I think it's time for the new bet.
I think you're right.
Stocks. They're the center of a universe. That's for every one of us. Consequence for one of us. Make our picks with no regret. Every open, every close, every spread. It's the mighty bet.
All right. So I go first. Is that?
That is true.
That's the deal. Oh man, I'm gonna throw one at you that you probably aren't ready for because I didn't mention it up until this point, specifically to blindside you.
Is it Tesla?
No, I'm shorting Tesla. No. My bet pick this week is Fortune Brands Home and Security Incorporated. They trade on the New York Stock Exchange under FBHS. FBHS. They are a mid-cap blend industrials building products company. They hit 2 or 3 days in a row of new 52-week highs.
Mm-hmm.
Their charts looking good. They're in that industrial building products industry right now where there aren't enough homes in the market to meet the real estate demand. So the next thing they're going to do is build a bunch of homes. I think this company is going to make me some money next week. FBHS.
All right. You want to guess what mine is?
Tesla?
No, because I have to buy it again on Monday. It's a new month. If I could carry it over, I totally would. Because it hasn't traded yet since those great delivery numbers came out. No, I think I want to take a gamble on Schnitzer Steel.
Schnitzer Steel.
The one that we talked about with earnings coming on. I was looking at what they've already put out with Nucor hitting highs. I think CMC's been doing really well. I know our steel mill's been booked out like crazy. Even if the earnings are just kind of in line with the analysts, I think when they give out their guidance for next quarter, I think is going to be good. Just because the steel industry as a whole just seems to be booked like crazy right now. I think I want to give them a shot.
All right, their stock ticker is SCHN.
SCHN. Ready for our random?
Yeah, what's our random?
They gave me MRTN. What do you think of that one? Martin Transport Limited. Small cap blend, railroad and rail. Average volume of 400,000. I mean, it seems decent enough.
I've been seeing a few road and rail companies hit new 52-week highs over the last couple of weeks, so anything could happen with this rail company.
I think it's good. We can go with that one, right?
Yeah.
All right. There you have
Why
it,
not?
folks.
Martin Transport, MRTN. Stay tuned next week. We'll find out who takes the lead and who falls behind.
And then listen Wednesday to find out what Dan has to do.
Oh, Lord. That's right. I'd forgotten until this very moment. You son of a bitch. How dare you win the bet and give me a consequence as we spoke about ahead of time.
Oh, boy.
When we made the bet.
I feel like
God.
I should have made you a ringtone, but I'm not as talented as you are. I still have that as my ringtone, by the way.
Yeah.
I actually kind of like it.
Yeah, right? It grows on you after a bit.
It's motivation to do better.
There you go. Oh, we're so glad you stuck around and made it to the end of the show with us, folks. I wish I had some soft jazz on the background right now. I could be taking a sip of a cocktail and putting on my bathrobe to end the day. It's been fantastic. And remember, please, 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 if you like our show, let us know. Rating and subscribing on your platform of choice. And if you like our show and hate social media like me, just tell all your friends. And if you have no friends and hate social media like Kyle, and you want to give us money to pay for advertising to help you find more friends, you can donate here.
I don't even like myself.
Yeah, I was wondering if you're gonna catch that dig.
Oh, I got it.
Yeah, you did.
I
You
believe
doubled
it.
down.
You're right.
You doubled down.
You're 100%.
So it's a big shop, folks. There's room for everybody. Come one, come all. We're glad you're here. And until next time, happy trades.
Bye, folks.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks in the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.